right, everyone. Welcome to a special edition of Bid Nerd, your daily nerd out on the most interesting car of the day from all the automotive enthusiast auction sites. I'm John Polnick, your host, along with my partner, Michael Deeb. Today, we have an expert, someone who actually knows what the heck he's talking about, which for most of our fans of the show, that will be a very strange thing for them. Clint Russell, welcome to the show. Thank you so much for taking a minute to join us and lending your expertise in finance and analysis. We are looking forward to hearing what you have to say. Thanks for being here, buddy. What's up?
Well, yeah, thank you for having me, John and Michael. There's a lot that's up, dude. But let's just get right into it because we don't have a lot of time.
Yep. Do it. And we'll try to be sensitive to that, and you're fitting us into 50,000 other interviews. So thanks again. All right. So yeah, give our audience a rundown on what is actually happening, kind of in a nutshell, for people that may not understand.
Okay. So Silicon Valley Bank was a large commercial bank. It didn't have enough assets to be at the highest threshold of regulatory oversight. It had 210 billion, give or take. The most harsh regulations begin at the 250 billion and up limit. So they were just underneath that, which, I don't think that's really a big part of the story, but it's just important to note. Washington Mutual was the biggest bank to go bust in my lifetime, and they had 330 billion, just to give people an idea of scale. So wow. It's about 2/3 as big as Washington Mutual. Washington Mutual was then acquired by JP Morgan Chase in the 2009 arena, and basically you had TARP and QE and all sorts of financial maneuvering that was able to kick the can. The reason that it's so different this go around is that because of the COVID hysteria and the lockdowns and the massive amount of money printing that occurred in 2020-21, we are now facing pretty severe inflation. And because there's inflation, it limits the options that are on the table for the Federal Reserve. And because the Federal Reserve has been hiking interest rates very aggressively, it in fact created this dynamic that drove Silicon Valley Bank into insolvency. What they did was because they had a lot of funds that were coming in from the tech sector as well as the crypto world. In 2021, when the crypto world and Bitcoin in particular were going gangbusters, there was a huge influx of deposits within Silicon Valley Bank from that area. What they did with that capital was extraordinarily stupid. Instead of just putting it into one-year T-bills, which they could have got a 1% annualized return, what they chose to do instead was to put it into 10-year mortgage-backed securities. Because of the duration, that means that if you are forced into a liquidation scenario, you actually have to realize the losses based off of the interest rate moves that have happened since you purchased it. And because the Fed has been very rapidly and aggressively raising interest rates for the past 13 months, they opted, instead of realizing those losses when the Fed first pivoted and started to hike, they sat on them, and basically they were just praying that Jerome Powell would pivot. He did not, and as a result, they had to realize enormous losses on that $80 billion worth of 10-year mortgage-backed securities that they were sitting on, driving them into insolvency.
So just to dumb that down even more, basically what happened is with all the money and correct me if I'm wrong, Clint, all the money that was being deposited by these Series A and Series B venture funds for startup companies that were going into this SVB commercial bank, all that money that was sitting there, they need to have a certain amount of liquid cash so that if the depositors need that cash, they can draw from it. So if the bank on one side of their balance sheet, they have a bunch of long-term investments, they can't get access to that money quickly without selling it at a very big loss in order to give depositors their money, correct?
Yes, and this is where my libertarian streak shines through, because I am absolutely mind blown that after Dodd-Frank, after the great financial crisis of 2008-09, the regulatory agency, the rules that they applied to all banks, including SVB, was that cash and debt instruments like mortgage-backed securities or T-bills were considered the exact same thing. Let me, break some news for you guys. They're not. They're not the same thing. Cash is cash, And if you have deposits with the Federal Reserve Bank, that's also liquid, that's also cash. If it is a mortgage-backed security, if it is a debt instrument, especially a long-term debt instrument, if you have interest rate maneuvers that go against you, you can bleed all over the floor, and that's exactly what happened. So they had to realize that because they had so many people that were withdrawing cash. Also, that was also a product of the interest rate hiking cycle. Silicon Valley entrepreneurs, they needed their capital, and because they couldn't borrow because well, that also, but it was really because the interest rates had spiked so much that borrowing started to dry up, underwriting started to become more stringent. So the bank run itself is actually a product of the Federal Reserve. Also, the fact that they were in these long dated T-bills and they didn't hedge, that was all fine apparently by the regulators. It's just government being worthless at what it does, which is what government is.
Isn't the reason why banks like SVB and who knows how many other ones bought into these long-term bonds essentially at 2% or whatever, because that's what the feds were selling them? That was what they were saying. The feds were basically saying at the time that inflation is transitory and that there isn't going to be any, and so it's okay to do these long terms because maybe you're going to get a 10 bips increase in the interest rate, but it's not going to go up by 3 or 4x. So yeah, go for it, no problem. It was the feds that were these banks were compliant, were they not?
Well, they were compliant and they were buying into the propaganda. If they had any understanding of Austrian economics, they would have known that they were being lied to. Ultimately, as a fiduciary for your investors, as a CFO, CEO, whatever of Silicon Valley Bank, you still should have been better than that. You should have been like, I'm not trying to write off their culpability in this. They should be in prison as far as I'm concerned, particularly the CEO who sold millions of dollars worth of shares of SVB in mid-February, and then on Monday of this past week said, oh, we're fine, no one has anything to worry about. So this dude was already heading for the lifeboats while all of his shareholders were just sitting tight saying, oh, he says it's all good, we're all good. So go to prison, do not pass go.
Do you think there's a chance that those guys will actually serve time, that bank and Silver State? You think they'll get off?
Well, technically, what did they once again, they were compliant. These are the rules. If you have a governing body, literally a governing body saying these are the rules, play by them, well, okay. If we're going to put all that power in these guys' hands, I look at it kind of like, I'll bring this back to cars for a second, right? Modern monetary policy is steering the economy that way is kind of like steering a 911 around a corner. When you get into trouble, the correct thing to do is not necessarily intuitive, right? If you oversteer in a sports car that has an engine in the back, you don't want to lift on the throttle and you don't want to hit the brakes because that's going to cause the thing to, spin out of control and crash. But it looks like the feds are basically going, well, there's only two things you can do to steer the economy: turn left or turn right, and that's it. Mm-hmm. It's raise interest rates or lower interest rates. It's like this binary view of something that has a lot more nuance to it. Yeah.
Yeah, well, yeah, and the reality is that they've put themselves in a rock and a hard place. They now have to choose behind a cascading contagion of defaults and bank runs and basically a global Great Depression, or opt for the potential of hyperinflation. That's the dual path option that they're now presented with because they have behaved in such an irresponsible, profligate, spending fashion. As far as I'm concerned, Jerome Powell and Janet Yellen and all these people ought to be in prison too. I'm not taking the blame off the local banker and putting it on, like, they're all to blame. They all need to go to prison. I apologize for being so curt earlier when you said will they go to prison. Look, if you didn't see anybody go to prison after the 08-09 great financial crisis, you're not going to see it now. They don't care. They're all in the same team, and we ain't on that team. And they don't work on behalf of us. They work on behalf of their partners, and we aren't their partners. And the reason I'm so furious is because I know that at the end of the day, the average person, not the wealthy, but just the average guy, is going to suffer terribly, whichever decision that they make. And none of this had to happen. And it breaks my heart.
So, okay, one of the things that over the weekend, watching your Twitter feed and a lot of other, people talking about this subject, obviously that's all anyone was talking about. What the feds did is they came in and said, all right, they're going to insure deposits. They're not insuring the investors or anyone like that. At least right now, that's not what they're saying. You are someone who, I know you and I have opinions about long-term solutions for these problems, but in the intermediary, sometimes, it's like when you were on our show. By the way, Clint has been on the show once before, so make sure you check out that episode and check out his podcast, Liberty Lockdown. Why we never talked about that? So check out his podcast. But the last time you were on our show, we talked about, the idea that when you're drunk, you need to stop drinking, but you can't necessarily go cold turkey if you're an addict. So when the feds insured the deposits over the weekend, that was probably the correct thing to do to stop a contagion, an immediate contagion. But we're not necessarily saying bail everyone out. How do you see that situation? Did they just kick it down the road yet again? And how long will this can bounce before you can't kick it anymore?
Yeah, well, not much longer. I'm of the opinion, it's not a libertarian answer, but I'm of the opinion that, the depositors in banks ultimately aren't really culpable, because there is this belief, it's mistaken, but there is this belief that the Fed will intervene or the FDIC will step in and then they will look after your deposits. These people aren't making risky bets. They're just putting their capital into a bad bank. Should they pay some price just to learn a lesson? Yeah, probably. Should they lose all of their money? No, probably not. So I'm kind of in between on this. The libertarian community is furious with me because I don't think that, just because here's the reality of it. Like, this is such a cultural civil war that because so much of the businesses that were banking with Silicon Valley Bank are woke, a lot of people in my community just hate them and they just want to see them all suffer too. And it's like, yeah, I get that. I get the instinct, but at the same time, like, did they really do anything wrong here just by putting their deposits with a bunch of scumbags? Like, I don't think so. So, as a intermediate step, as a Band-Aid to a bullet wound, if you will, I think that having the FDIC come in and insure those deposits and the ones over at Signature Bank in New York, I think that that's probably what's necessary to prevent an all-out global Great Depression, along with bank runs like we have never seen since the 1930s. So, is it a good option? No, we don't have good options left.
It's one thing. Well, hold on, Deeb. Because I actually have a question for you, okay, Deeb. But it's one thing to, as a depositor, know where you're putting your money, and maybe saying, okay, maybe I need to pay more attention to which bank I'm putting my money in. But it's another thing entirely that your paycheck is coming from a bank that you have no control over who your employer uses as a bank.
Exactly.
And those are the people that are going to get murdered. Michael Deeb, you mentioned earlier off air, being in San Francisco, that First Republic Bank in Marin has people lined around the block. Tell us about that.
Yeah, so a couple of banks seem to have suffered from their shares all tumbled this morning. So First Republic seemed to be hit the hardest. That's a San Francisco bank that's local here. And the thing in Mill Valley across the Golden Gate Bridge was that the First Republic branch in Mill Valley, that the employees and some of their customers were in there at 6:30 in the morning, already trying to hash this thing out. Another bank called Western Alliance. So First Republic lost about 62% of its value this morning when trading began on the East Coast. And then Western Alliance lost about 47%. So I think they're, JP, when you and I were talking about this over the weekend, you were saying the regional banks, here in California could really feel it when everything opened for business on Monday. And those seem to be the two local regional banks that are being hit the hardest from the fallout from SVB, and I think the other one is Silver State, right? Isn't that the other one? Or
Silvergate was already defunct.
Silvergate. Oh, a couple days before, right? That's the one that was earlier in the week. Yeah.
It was so a while ago. Clint, I don't remember exactly.
Okay, Clint, I have a question. So obviously there's a sound bite that they're playing on the radio from Sleepy Joe, and he's promising stricter regulations so that all people's deposits would be safe. Do you think legislation could fix any of these problems, or is all that just lip service and a pipe dream? And as long as these greedy bastards are in charge, we're all just sheep following the herd off the cliff.
Here's the issue that you have. Basically, because there is no responsibility that's held by these people ultimately, because they believe that they have a blank check bailout that exists, and because there's no criminal charges that are brought when they commit horrific fraud to the tune of billions, you now have a moral hazard where people will just simply not behave well because they believe that they're above the law, and history tells them that they're correct. So I don't believe for a second that the federal government, the Fed, FDIC, any of these people are going to hold their buddies to account. You got to keep in mind the CEO. Check this out. The CEO of Silicon Valley Bank was sitting on the San Francisco Fed board as of 2 days ago. As of Friday, he was let go. So
that means he was a regulator that was helping make the rules.
Well, he sat on the board. He wasn't really a regulator, but I mean, still, the point is, it's a small club, and we ain't in it. I mean, these guys are not going to punish each other because they're all, they all go to the same cocktail parties. They all speak the same language. They all scratch each other's back, and they all look after each other's, criminal behavior. So, look, if you're going to rely on the government to fix what is a government-created problem, you're going to be left wanting. It's not going to happen. People have to find ways of divesting themselves from crony corporations and start to take control of their own financial freedom and future. It's just not going to happen if you're going to turn to the government and ask them to save you.
Well, so what do we do as regular folks? I mean, looking at different asset classes, I mean, look at the stock market today. It's not that crazy off. I mean, everyone was expecting a bloodbath this morning, and it kind of rallied this morning. I think it's down like, I don't know. It's not down very much. Crypto had a rally. Yeah. And then, gold is seeing a spike, which I guess kind of makes some sense. From
Bitcoin
an asset class
ripped.
point of view, what's that?
Yeah.
Bitcoin ripped higher.
Yeah.
Yeah.
I mean, 25%, right, in one day. So what do we do? I mean, this show is all about, we talk about cars. We're car nerds. But when we started doing this, it was because we were car nerds. And then it became like, during all the lockdowns and stuff like that, and all the excess liquidity floating out there, all of a sudden classic cars became an asset class that's being traded on. And now all of a sudden it's like this show is like talking about stocks. Because the values of these things go up and down for all kinds of reasons. We always say that, well, in a downturn, if the missiles are going to be flying and it's the end of the world, you may as well be in the cool car. You can drive a car. You can't drive a fiduciary instrument. What are you doing out there to kind of hedge your bet? Is it just put all your money in crypto, or what the hell do we do?
Yeah, well, none of this is financial advice, but I'm of the opinion that you should be hedging both ways. I think that if the Fed does not pivot off of its interest rate hiking cycle that Jerome Powell has been extraordinarily committed to, then we are looking at cascading defaults that really cause serious damage to the economy.
Hey, Clint, can I interject here? And I just want to make sure that people understand what you mean when you say he needs to pivot with his interest rate. You're saying that he needs to start lowering interest rates.
Because I'm not saying he needs to
pivot. They don't really know what pivot means because they don't understand what the hell
pivot just means changing direction from the current trajectory that he's on. Currently, he is committed to hiking the Fed funds rate up to around 6%, and that is just a very, very high level for the amount of debt that exists within this system. So I don't think that level is sustainable. I think that you will see contagion effects and essentially a depression if he sticks to that for any extended period of time. So what I mean by pivot is that if he starts to reduce rates, starts to increase quantitative easing, do all the things that they did during COVID, do all the things that they did during the global financial crisis, like then you could see a real inflationary rip, in which case your classic car market should see a major bid. If it goes the opposite direction, if he stays steady to this path, I would be very interested in moving towards cash, because I think that you will see lots of assets that drop and a lot of values that you can find during that bloodbath.
Boy, that is a tightrope. Trying to figure out which way that's going to go.
It is, and that's why they call it trying to find a soft landing. That's the language that the Fed always uses, and the reality is that they never find one. Because you're dealing with so many variables. I mean, we're talking about a global economic system. You also have the potential for World War III on two fronts, both with China over Taiwan or Russia over Ukraine. Then you have 30 plus trillion in debt. Then you have the unfunded liabilities. Then you have the advent of cryptocurrency, which is starting to really put pressure on the dollar. Then you have the fact that the Chinese just negotiated a peace treaty between Saudi Arabia and Iran. Saudi Arabia had been selling its oil in dollars since the 1970s, which was the primary underpinning once the U.S. dollar came off the gold reserve standard. These are all cataclysmic shifts that are happening simultaneously, and the Federal Reserve is trying to basically process all of that information and come up with the right policies in real time as to what the price of money should be. It's a fool's errand. It's an impossibility. They will fail in whatever path they take, and we will suffer as a consequence of it. I apologize for the rant, but that's the truth.
It seems like the one thing that you can count on is that the powers that be will make the wrong decision. Back to the 9/11 driving, if they start oversteering, they're going to hit the brakes. They're going to spin out. They're going to do whatever the wrong thing is. So at least if you know that they're going to do the wrong thing, that might make it. I mean, it's like any other classic short, right? What are you short? If you know ahead of time what they're going to do wrong, well, unfortunately in this situation, that there's two really big wrong things that they could do, and they're the opposite of one another. And which one's it going to be?
Which is why I believe a 50-50 hedge both directions makes sense. If you want some classic cars and some precious metal and some cryptocurrency to hedge against the potential for a very severe inflationary period, that makes sense. And then if you want to have cash to try and buy assets during a deflationary cycle, that makes sense. So until I have better guidance on which it will be, I can't say definitively. And as such, I think that the only prudent answer is to hedge.
That sounds like the best advice I think anyone can. Remember, this is not financial advice. We are just postulating here. We're just. I think the one bit of advice that I will give everyone is if the weather's halfway decent, go and you have a classic car, go get in and drive around a little bit. Clint, I still haven't seen a picture of your vet. Go take the top off and drive down the beach. I want to see some video of that.
Yeah, man.
I'm going to go take the 911, drop the top, and go to Motor Club tonight and hang out with my friends and just be really grateful for the things that we do and still have.
Just decompress. I totally agree. I'm gonna drop the top on the vet and go rip around town as soon as I'm done with all these interviews. But that'll probably have to wait till tomorrow because I got like 4 more to do. But I really appreciate the guys' time. And if people want to follow my work, I'm a co-host of Tower Gang, which even though you probably can't imagine it after this rant I just went on, I do a comedy show called Tower Gang. I also am the host of Liberty Lockdown, where I cover all this dark shit all the time. So you can check out either of those on YouTube. I've been banned, but I am now going to be back in about 2 weeks over on YouTube. So I would appreciate a sub over there.
That's right, everyone. Go check out all the things that Clint Russell does. Thank you again so much for carving out a minute.
Thank you, Clint.
Next time you're in Vegas, man,
my pleasure.
You got to come out to Vegas when it's not Skankfest. And I'll just lend you one of my cars, and we'll go drive around and ride rock, and we're gonna have a good time. All right?
Yeah, you're talking, brother. I'll see you soon.
All right. Well, again, that was Clint Russell from Liberty Lockdown. Check him out on all the socials, all the YouTubes, all the normal places. He really is someone to watch if you want the inside scoop on what's going on in the financial markets.
JP, what did you think of all that? Now that that was a lot, right? Yeah, it is sobering. With him, there's no pretense, right? He just gives it to you raw, and it's up to you if it feels good or not. But every once in a while, I think it's really important to take an honest look at what's going on and be more pragmatic. It's real easy to sit here and talk about what we talk about and fantasize about, oh, if I could afford this and I could afford that and stuff like that. But every once in a while, you got to look at your bank statement and get real. And I feel like that's what we just did. And I'm just curious. I know you're arguably more alert than most of my people because you're the one that dares to talk about this stuff, even on our show, on our platform. You use it to bring these things to the conscious. After talking to Clint and getting that take, can you just tell us how you're feeling after that? Because I'm just curious to know what that means to you.
Yeah, I mean, we try to avoid straight up politics here on the show, because this is supposed to be a fun thing, right? This is a fun show.
Right.
We're talking about cars, but because we're talking about the values of cars and we're making predictions on auction closes and stuff like that, you can't help but have to bring what's going on in the economy into our discussion. You've seen me do rants about inflation and all that kind of stuff. Clint is a political commentator. I mean, that really is his wheelhouse. That's how he has built his, his base and his channels, and become very popular in a certain sector. I pay attention to a lot of different sources. I'm a religious viewer. I don't know what podcasts or where you guys get your news, if it's from CNN or if it's from Fox, or if it's from, those are considered the cathedral, right? Those are, corporate news. Or are you someone that gets your news from the internet? Do you listen to podcasts? I was just saying I religiously listen to the All In podcast, which is, I think, one of the most insightful podcasts on the internet anywhere. I encourage anyone who's interested in anything financial to watch that podcast. It's David Sachs and Chamath and these four guys that are they're tech billionaires, literally, that talk about a lot of finance, but then they get into politics and all kinds of other stuff, and how what they do kind of affects the world. You'll see Elon Musk pop in all the time. I'm not suggesting that anyone be conservative or liberal or progressive or libertarian or any of those types of things. What we're trying to do here on this particular episode is just say that, maybe you need to consider where you're getting your information. And like Clinton says, hedge your bets financially. I think people need to start hedging their information sources more responsibly, because I think people kind of get into echo chambers and they listen to information from one source or another. And then that's it. And they base all their decisions based on what they're hearing from, kind of a binary one side or the other type of thing. And I think right now things are so crazy out there that the more places that you can get information, the better. If anything has taught us over the last couple of years, maybe the powers that be aren't as honest as some of us thought they were. Maybe some of us didn't think they were honest in the first place, but this isn't a neener situation. This is a, Deep, have you ever heard of the red pill or the white? I'm sorry, the red pill or the blue pill? Have you heard of that as a kind of political conversation? What does that mean to you?
The way I see it is, do you want the honest truth, or do you want to just continue to just forget that you might have heard that something else is going on, and you just want to go back to the fantasy and put the blinders back on? That's what it means to me. So, when we say you should have taken the red pill, it's like, I wish I didn't know, but now I know. Because once you hear something, when you're informed with real knowledge, you have a responsibility to that knowledge. You can't pretend like it doesn't exist. It's true. The sun is shining. It's real. The earth is round. No matter how bad you might want to believe it's flat, because that's the story you grew up with, I promise you, if you keep walking that way, you'll wind up back here eventually. You know what I mean?
Yeah. The reason why I kind of put you on this. Yeah. I mean, the reason why I put you on the spot is that I think a lot of people are under the false idea that having been red pilled means that you are now a conservative. And that's not at all what that means. Typically, when someone says that they have been red pilled, what that usually means, or the intention of that phrase having been, gleaned from the Matrix originally, obviously, but the people that coined it, their intention was to basically say that you no longer believe everything you're told. It's, there are red-pilled progressives. There are red-pilled conservatives. There are red-pilled Democrats, and there are red-pilled Republicans. They're not necessarily the same thing, but they don't necessarily have the same views on things, but they are going, I don't think that people are telling us the truth here. And that's one thing I think that on Bid Nerds, we are at least one half of Bid Nerds is pretty darn red-pilled, and we're always going to try to bring you what we think is the truth. But again, we're just having fun. This is just cars. Be safe out there, you guys. There's a lot to be paying attention to. And it's interesting that Clint straight up said that, classic cars may actually be a hedge against all this BS. Can you believe that as a takeaway?
Yeah. I can actually. You started from the beginning. You said, look, what we do is we started off just talking about the auctions, but then we're really talking about the fluctuating values as we cover yet another CLK Black Series or another SC Coupe. The values of those cars have changed since we started doing the show, and we kind of monitor that. We mirror back what's happening in the space. But I think as we make our predictions as to what we think the values are going to be, in this case, just a couple of days from now, but those values are going to hold for a couple of weeks or a couple of months until the market shifts and changes yet again. It's important to understand what's happening to the economy. It's important to understand what's happening to the value that is of the dollar that that car holds or is based upon. So if you want to plant a seed, you have to understand what's in the dirt. And so if you're going to try to predict how many dollars an SC is worth, then what's a dollar worth? You got to back that conversation up at least 5 feet to understand what the hell we're talking about. And I've learned a shit ton just doing the show with you. So I really appreciate Clint coming on and biting off whatever it was, 25 minutes of his time to speak to our audience about what he's seen through his eyes and through his filter. Certainly there was a lot of opinion there, but I appreciated his opinion, and it was based on all of the, it was his take on all of the facts that he also gave us. And I thought it was really valuable. So, fascinating stuff. And I'm really glad that you reached out to him and that he made time for us and the herd. So I'm
gonna introduce one other concept, and then we'll get out of here. We'll wrap this episode up. We talked about the red pill and the blue pill. There are two other pills: the black pill and the white pill. My good friend Clint very often leans on. He might be taking a few too many black pills. The black pill is kind of the end is nigh, and I think that it seems like that sometimes from when you hear from a guy like Clint, because he has a short amount of time to kind of distill a bunch of information, and it can come across as black pilled. But I don't really think he's that black pilled as he may have come across. The white pill as a counter is a little bit more optimistic. The white pill is hope. It's not just full-blown optimism like, oh, everything's going to be fine. It's that there's hope. Right? Things may not look good right now. There's a lot of bad, negative stuff being bandied about, but there's still a lot of great things out there. We are still in America. We are still free people. If you're above ground.
He makes, what he does with his time for a living is to study this stuff. And when people are grossly irresponsible out of greed and a fear or a lack of accountability, like he said, he doesn't think any of these guys are going to be held accountable or have any penance for what they've done, because it's their friends that make the rules, and they tend to get away with it. History tells us that they get away with it. So I think as he's telling us what's going on, it's full of a lot of virile and anger because of that. And I can, initially you look at him and you listen to his tone and you think black pill, but I can understand why he's angry. I'm angry too. I mean, like you said, we're all kind of us as sort of everyday people. We're all sort of in the same boat. And there's a, in racing, John, there's a blue flag, which means the faster driver's coming up behind you. And so one time it was explained to me, there's a race on track and you're not in it. He said, they're all in a big club and they're making all the rules and they get all the money, and we're not in that group. We're not we're not in it. So I totally understand that. And like I said, I'm really grateful that he came on and spoke to us. So thanks for having him on, John.
Well, we are grateful for our audience and for all of you who joined us in this discussion. We know that this is a big break from what we normally do on the show, but we felt like it was important, and having access to someone like Clint, I thought was something that we should leverage for our audience, and I hope you guys appreciate it. Let us know where you're at in the comments. Are you black pilled? Are you white pilled? Are you blue pilled? Red pilled? Who cares about pills? What do you think? Are you still buying cars? Are you going to get out there and drive them?
Yeah. As Clint said, you could hedge with a car. So what's your hedge car? All our regulars, tell us what your hedge car is. I just hedged mine, 84 turbo look. So what are you going to hedge with?
Man, I can't wait to close out the recording today, and it's a beautiful day in Las Vegas. I just want to go get in the convertible and go drive somewhere. Go take a drive, everyone. clear out. We will see you tomorrow on a more normal episode of Bid Nerd, your daily nerd on the most interesting car of the day from all the auction sites. One more thanks goes out to Clint Russell for joining us. Michael Deeb, thank you for being my partner and being on the show today, as per usual. And thank all of you and our good friends at Godden Classic who help us make this show a reality.
The Rummy Show.
We will see you guys tomorrow.